All right, here we go. Now, what you're going to be seeing on your screen right now, this is a platform called TradingView. This is what we use as educators to really teach and help you make sense of this whole foreign exchange situation that we have going on. All right, cool. All right, give me a second. We'll make these numbers on the side bigger. Now, on your screen, you're definitely going to be seeing, uh, all right, let me put this on this side. All right, on your screen, you're going to see some numbers on your right, and you're also seeing some numbers at the bottom. All right, at the bottom of your screen. The numbers on the right, this represents price. The numbers at the bottom, that represents time. All right, so whenever we're looking at this chart, it's teaching us the relationship between price at a given time. All right, everything that we're doing in here is going to be based on time and price. All right, when is the right time to buy, when is the right time to sell. All right, and how long did it take price to increase in value or decrease in value? So we only do two things in this market, right? Becoming a trader, you're only going to be doing two things. First thing is buying, and the second is selling. All right, you buy and you sell. That's all we do. There's a third one, but we will call that waiting, being patient, waiting to buy or waiting to sell. All right, so we buy, sell, and we have patience. We buy when the value of a currency is increasing, right? When there's a demand for it, when we know that people want it, that's when we buy, right? And by buying, I want you to imagine that when I say buy, you are simply saying, yes, I agree that the value of this currency, the value of the relationship between the British pound and the Japanese yen, that is going to increase in value. That is you buying. If you believe the value is going to drop, that is you selling, right? You are not literally buying the currency. Okay. If you're with me so far, you could give me an AC in the chat. If you're with me so far, give me AC in the chat. All right, perfect. Wonderful. All right. So we are buying when the currency is increasing in value, we sell when it's decreasing in value. Now, there are a couple words that you're going to be hearing throughout your journey here. When price is increasing in value, we like to say that it is bullish. When it is decreasing in value, we tend to say that it is bearish. All right. Where now, if you went to the States, if you ever seen Wall Street, there's going to be a sculpture of a bull, there's going to be a sculpture of a bear. These two animals relate to the market in this particular way. We say that it's bullish because you're looking at how bulls attack. When they're attacking someone, they tend to get their horns and they come down and then they kind of scoop up, right? So they go down and scoop up. So bullish because they're going up. Bears, they tend to raise their hand and smack you across your face, right? So they're more swipe down because they're going to be bigger than you. So that's why it's bearish, right? I wish it was deeper than that, but there you go. Bullish and bearish. If it's increasing, it's bullish. If it's decreasing, it's bearish. All right. So those are the two directions that we look for. Now, um, when price is going up, it doesn't just shoot up in one direction. That's why I have these drawn as diagonals, right? The value of something doesn't just start at zero and go all the way up to a million. It goes up like a staircase. It goes up over time. So at some point, it's going to be going up. Then it comes down a little bit for a bit. Then it continues to go up. Then it comes down, etc., etc. By seeing this happening over and over, this is what we call a trend. But before we get there, if you're taking notes, there is a pattern that shows up, right? This pattern is going to show up constantly. Trust me on this. When you understand what this pattern is, one, and you see it often enough, your understanding of this pattern is going to be directly related to the amount of money that you're able to make. So if you're able to identify patterns, remember when we were in primary school, we had to learn our numbers. Well, preschool, we had to learn our numbers, letters, shapes. We learned that by repetition. Your teacher would say, "What's your name?" Your name is, let's see, we got Tennille on here. Your name is Tennille. That starts with a T. T is drawn in this particular way, right? And every time you come to class, you're going to learn your letter. I need you to have that same energy here. As a beginner, just learn this, see this, and be like, okay, this is the one pattern that repeats itself constantly. If you understand this, you will know when price is going up. The opposite is this. Price comes down, it goes back up, and then continues going down. Same shape, it's just going in the opposite direction. All right. When you see this, this pattern is going to be telling you that price is decreasing in value. If you're following me so far, put an AC in the chat. All right. All right, good stuff. So from this point on, I'm going to really focus on this pattern on the left, all right, for a bullish situation, right? Because I don't want to teach you going up and going down at the same time. I want to teach you going up. When you have an understanding of going up, we just flip that for going down. Okay? So this is what we have. This pattern right here. Now, this is a skill that we're learning. All right? This is a skill, like learning how to play an instrument, playing football, sports, public speaking. This is a skill. Because it's a skill, we're not guessing out here. We're not gambling. We are making educated decisions based on data. All right. And this pattern is going to help us with this. So we know we do two things when we're in this foreign exchange market. We buy and we sell. We know when we buy, we only buy when price is going up. And we also know when price is going up, when it's bullish, it doesn't just shoot up in the air like a rocket. It happens over time and it's always going to have ups and downs. It's going to have peaks and valleys. It's like life. I'm not going to go too deep into that, but trading is a lot like life. All right. They're going to have these peaks and valleys. They're going to have these ups and downs. But you can have the perspective that overall life is going up. Even though right now you're in a sucky period of life, overall you're much better now than you were X amount of years ago. Yeah. And even if you're not, being at that low point doesn't mean that you have to stay there. There's still potential for you to get higher, right? Cool. That's just a little mindset in there. But this is the pattern that we have. Now, in your notes, we're going to break down the anatomy of this pattern right here. All right. And this is going to be important as you grow and develop. Just follow me for now. Think about taking the notes for your future self, not the self right now that's like, I don't understand any of this stuff right now. All right, so you're taking notes for your future self. So here's the thing. Whenever this pattern is forming, there are going to be three phases attached to it. The first phase, let me just label this right here. We got A, B, C, and D. All right, between A and B, this is the impulsive phase. Right? This is the impulsive phase. This is the moment when something happened in life significant. Right? This is a moment that you decided, you know what? I've been hearing about this Forex thing for the longest time. I'm going to join this community and see what it's all about. That was your impulsive phase. Right? You don't know anything yet, but you made a decision that put you in a position that you could potentially go higher. That is the impulsive phase. All right. When you decided, hey, I want to be an astronaut. I want to be a teacher, right? That was your impulsive phase. Everything happened after that to kind of help you go along. So A to B, that's the impulsive phase. That tells us price wants to go up, right? But we're not going to get into trade yet. B to C, all right, let me change color for my visual learners. If you're a visual learner, go ahead and drop a V in the chat. That will be me for sure, 100%. I'm an art student. I love me some colors. All right, B to C, this is corrective. All right, this is corrective. This is pullback. All right, the pullback is a lot like archery, right? You take the ball out the quiver, you put it in the bowl, you draw it back. What happens when you draw back a bow? What happens when you pull back a gutter perk or a slingshot? You're getting ready to fire, right? It's going to go a lot further after you pull it back. So these markets, they move the same way. Money moves the same way. The impulse says, hello, I'm here. I feel like I want to do something. When the pullback happens, that correct. You get some momentum happening. The pullback says, all right, I'm gonna get back here. And then C to D, this is the money phase, right? This is the continuation. This is the continuation. This is where we make the money. So if we are all we're looking for trade, we want to set it up, we wait for the impulse to happen. Sorry, we watch the impulse happen. We wait for the pullback or the correction to occur, and then we get in the trade right here at C. Right? We get in the trade at C, and then from C to D, that is profit. That is money in our pockets. That is Shein for the next 3 months. That is your subscriptions for whatever. That is rent. That is what C and D is. All right. That's a continuation. Now, yeah, I'm gonna get there. But just think about the principle here. All right. If it's going down, the first part of price going down is going to be the impulse. The second part is still going to be a pullback, and the third is still going to be continuation. All right. Just that instead of the setup going up like this, it's going to be this. It's going to come down. Impulse, correction, continuation. All right. Same thing. The first part is always the impulse. The second is the pullback. The third is the continuation. All right. But in the interest of time, I want to focus on the buys. Cool. Now, C is where we enter the market. Now, I'm going to show you guys that you do this all the time. You already understand this idea. How do I know this? Because Black Friday is coming. The impulse is just the big moment that happens, right? The impulse, like imagine you're driving behind a car. All right, you're driving behind a car. Actually, no. You're going in this direction, the car is coming towards you, and they turn on the indicator, which would mean they got a cross in front of you. When you see the car's indicator, right, what is that telling you? It's saying is this car wants to turn. The car is not turning yet. You're not stopping yet. You see the indicator on, you're like, you know what? This car might want to turn. That is the impulse. It's just giving you a signal. It's saying, hey, look at me, pay attention. You might be able to make some money if we get a pullback happening. All right, but I'm gonna get there. I'll start putting stuff together later. But for now, just know that the pattern has 3 phases: the impulse, the pullback, the continuation. All right. And when we're looking to buy, we're going to buy at the end of the pullback so that we get that whole continuation. We're going to buy at C. Now, here's how I know that you guys know how to do this. Has anyone ever bought anything during Black Friday? Or do you know someone that bought something, let's say off Amazon during Black Friday? If that's you, just put a 2 in the chat.
So yes.
Yeah, 100%, 100%. We all know someone that bought something during Black Friday. Now, let's make this make sense. Black Friday, that's usually on, let's say that's on electronics, right? For sake of argument, we own an electronics store. The name of our electronics store is going to be The Plug. Why? Because I like puns and it's puntastic. Our store is called The Plug. Okay. We need some new TVs. All right. We need some new TVs. Black Friday is coming up. Right now, it's not Black Friday. It's the end coming down to the end of summer. Would you rather buy your TV during summer or wait till Black Friday? Let me know. You want to buy it right now or you want to buy it during Black Friday? Right. You're going to wait. You're going to wait for Black Friday. Now, why would you wait till Black Friday? Why would you wait till Black Friday instead of paying whatever the price is now? Black Friday is cheaper. All right. It's cheaper. Yes, it's a better price. All right. Let's stick a pin. Let's stick a pin. I want you to look at this pattern right here. All right. We're gonna watch this pattern. Um, A, A is us. During A, we opened our electronics store. All right. This is a story. We opened our electronics store during this period, during the impulse. Electronics store opens. That's telling people, hey, hello, we're here. We sell things. Summer is coming around. It's B, right? The price of the TVs during summer probably isn't going to be as cheap as it is during Black Friday. So we know this and we're trying to make sales. Things are happening for us. Um, but we need some new inventory. We got some old TVs, with the big back. We got the big back TVs. And we're like, nah, we got to get those flat screens, right? We need to get much better TVs. So we say, you know what? Black Friday is coming up. Let's wait. So between B and C, we're waiting for Black Friday to happen. July finished, August finished, September, we're coming down to November. And this is where we are. We're now looking at all the websites, we're seeing the TVs, we're like, all right, cool, 50% off. Actually, what would be, what kind of discount, right, would you guys love to have on a TV or during Black Friday? What kind of discount makes sense for you guys? Like 5%? Is that a discount for you? 10%? 50? What feels like it makes sense? 80%, right? No less than 50. Mario loved that. 75% off. Yeah. And listen, here within the Profit Arena, a discount is anything that's 50% off or more, right? We want 50 off or more. So 50%, 60%, 70%, 80% off. That's what we want. So we're going back to this pattern. C, right? C, in an ideal situation, we only consider it a discount. We only consider it worth buying if it's 50% or more off, right? If the discount is 50% or more, that's the only time that it is worth buying. If it's not below this line, we don't want it. So if you're in a trade, you're looking to buy, if price from B, a pullback comes and it stops right here, we don't want that, right? The reason why we don't want it, that's more for intermediate. You don't need to worry about it. Just trust me. We want it when it's less than 50%. Now, we own this store and everybody said we want to wait till Black Friday because one, it's cheaper. It's a better price. If we buy the TV down here, right? And then we wait to sell the TV when price is up here, right? If we buy it here and wait to sell it up here, do you think we make more money than if we bought it here and sold it up there? Let me know. If we buy it at C, do we make more money than if we buy it right here? Give me a Y if that's a yes. For sure. Yeah. Now, I'm gonna ask a foolish question. As traders, right? Everyone on this call, you guys are traders. Do you prefer you want to make more money or less money? All right, more or less? More. Fantastic. So here's what I want you to think mentally as you go through your process, as you're going through the information in the academy. When I'm looking to buy, I want to buy one at the end of the pullback, right? I want to buy down here. Why? Because one, it's more than 50% off, which means it's very cheap. I get it on the low. I'm getting it at a discounted price. I'm buying it when its value is SY Adams, when the value is a dollar store, and I want to sell it when it's Louis Vuitton. I want to sell it when it's a Monet. I want to sell it when it's ridiculously expensive. That's business. That's commerce. Buy low, sell high. All right. That's the principle. So when we see these patterns showing up, right? When we see these patterns showing up, we always want to buy at that C point. We want to buy during the pullback, right? Is this making sense so far? For people that have never traded before, do you feel closer to feeling like a trader than you did when we started 30 minutes ago? All right, cool. Sweet. All right, now I'm going to show you what a chart actually looks like. It might look like a heart monitor. Please do not panic. All right? Don't panic. Anybody panicking? Anybody like, Kurt, come on, bro. Come on. What is this? Don't panic. I'm gonna make this make sense for you. All right? I will make this make sense. I promise. Okay. First question. Jeez. First question for you guys. Oops. Between these two green vertical lines, right? Between this vertical line and this vertical line, what direction is what direction is the market going? Remember, I told you we do two things, right? We buy and we sell. We buy when price is going up, sell when it's going down. All right. So it's bullish. Appreciate you guys for using the words. It is bullish. What do we do when the market is bullish? We buy. All right. Cool. So, first thing that you do as a trader, you need to know what direction the market is going. If you don't know the direction, you can't make money. You can't make money because you can't decide if you're going to buy or if you're going to sell. All right? Cool. Let's get into it. It's very exciting. So, first thing that we're going to do on your paper, you drew the pattern impulse, pullback, continuation. Let's see if we can find this on this chart. This is very Dora moment. All right. If you guys have never seen Dora the Explorer, then this is that moment for you right now. So here we go. We're going to start from here. Impulse, correction, continuation. Here's the question, right? Is the pullback, did we get more than 50% off? Right? We started here, we came up, we came back down. Is this point down here more than 50% off? Yes. All right, sweet. So that means, boom, hypothetically, we bought right here, right? A, B, C. Now, this is where the pattern now repeats, all right? It repeats on top of itself. So the continuation becomes the impulse for the next phase of this pattern, all right? So this is the impulse, correction, continuation. Let's see what we got here. We're going to check it. And C is the lowest point of the pullback. Is this 50% or more off? Right? Is the discount 50% or more? All right, let me see. Just barely. That's okay. Right? Just barely. Right? We're not getting into the candle closures or any of that fun stuff. But this orange line right here, that's the 50% level. And you can see we got the little purple little thing right here that came below it. So yes, 50% or more off of that. So that would have been another, boom, buy right there. Look at all of this glorious profit right here. Got all of that, all right? Now, this continuation then becomes an impulse. So this, and it pulls back, and it goes out here. Now, I'm not going to spend time explaining why I skip this too much, but here's the simple explanation, all right? When we are looking at this pattern, this point at the top is going to be the highest point, and then this is going to be the lowest point, all right? The lowest point of that pullback phase. So price came up here, it came down, it stopped here, yes, but then it came back up, right? But this did not go higher than this. So this one is still the highest point. Price then dropped down again. And from here, price went all the way up and went higher than this. All right. So we only deal with the highest point and the lowest point, and then the next high that was higher than the last high. Did I lose you guys just now? Because I know saying the same word over and over can get frustrating. But type of AC if you feel like you're following me. Or if you can at least roll with me and just when I skip something, don't worry about it. All right. Cool. So let's see. Let's see what's going on. Do we get 50% off of this? All right, Ria, I appreciate that. Here we go. 50% right here. Whoops. Sweet. All right. It's not like 80% or 90% off, but we got 50% to that trade. All right. And that's all we do. We look for that pattern to happen again. Right. And when we get the pullback, that's when we take the trade. Now, here's where things get interesting. Right. So if this is the impulse, this would be the pullback, first one. This, yes, it came higher. So we need to mark that. But did we get a discount? Right? Did we get a discount? Not at all. We didn't get a discount. So this wasn't worth our time. So we leave that alone. All right. So we let price continue. Came up, came down, went back up again. And right now we're here. So we need an impulse. We need that big move to happen. So we would have skipped. We wouldn't have looked to trade in here and wouldn't have looked to trade in here. But this now, this got our attention. Price came all the way up. We got it pull back. Continued. Was it 50%? Oh, we're measuring from, let me show you. Made that as big as possible. Remember, I told you we're looking at the high and the low, right? So the high and the low point. So if we are looking between this point and this point, right, between these green verticals, the lowest point over here is anywhere below these low vertical lines, okay? And then the highest point would have been here, and the next low point would have been here. So we're just drawing between those, right? So we can ignore all of these vertical shapes, which we call candlesticks. So we go impulse, pull back, and then it went up. Continuation. That answer your question, Lorna? So the 50% is from the low to the high. If you are using your drawing, right? Remember I said that this is A, B, C, D. We're looking to see, right? We're paying attention to the length of this, the A to B. What was the length of A to B? And then we are fast forwarding ahead to see where would 50% of A to B put us, right? And that would put us around here. All right. So we could continue going over and over and over, but you can kind of start to see that it's just a lot of this pattern repeating itself over and over. All right. And that's fine. As long as it keeps repeating, we keep buying. All right. Now, I was going to take this a little further because what we're talking about right now, this is called market structure. All right. It's called market structure. Now, everything that goes up also comes back down. And what that is going to mean, this is a simple version of it. This, this, this was an uptrend that came out here, and then a downtrend happened over here. And then an uptrend happened again. Right? So because this is an uptrend, that means that between here, there's going to be a series of those patterns repeating itself, right? It's going to give all right, let me pause here. I need to give you how to identify what a trend looks like so that I can do that last bit. And you would have some of the fundamentals that we can use to build on. All right. What I drew here, this is an uptrend, right? This is what we call a trend. This is a trend because it consists of a series of higher highs and higher lows. So this is going to be low. Right? This is a high. This is a higher low. This is a higher low because this low is higher than this low. This is going to be a higher high. This is a higher high because this high is higher than this high. All right? This is a higher low. This is a higher high. This is a higher low. And this is a higher high. Once an uptrend presents itself, once a bullish trend presents itself, remember in the diagram I showed you A, B, C, D, and I told you that we buy at C. In a trend, C is going to be where the higher low is. So this is where we would buy. This is where we would buy, and this is where we would buy. As long as we keep getting higher highs, right? When we get, so if we were here, if we were at this point, this higher low, when a higher high is created, we would look for 50% of this. If we get a higher low around that 50% or 60 or 80, 90%, that's where we would buy and we would take the trade. If we get another higher high, we're going to look for 50% and take the trade of off the next higher low. Pausing at this point. Let me know if you guys are clear. If you're clear, put AC in the chat. If you are confused of this part, just let me know. If you need me to repeat, if you need me to explain anything, if you want to ask a question, let me know. Can I go over it again? Absolutely. Absolutely. All right. So from the top, we know when we are in the foreign exchange market, we do two things. We buy and we sell. Right now, we're going to focus on buying. How do we know when it's time to buy? When price is going up, right? When price shows us that it's going up. For price to be going up, it needs to be in a trend, a bullish trend. And a bullish trend has these characteristics. It's going to have a series of higher highs and higher lows, right? If you stop getting higher highs and higher lows, the bullish trend is no longer a bullish trend. It's turning into a bearish trend. It's starting to go down. So if you have a low, you wait for the impulse to happen. When that impulse happens, it's going to give you a high. After the high, you're going to get a pullback. Let me draw this pattern here. After the high, you're going to get that pullback, right? You're going to get that correction, which will give us a higher low. If we have a higher low, that's an area that we would want to buy from. All right. And we're going to hold that trade and wait to see if we get a higher high. Right. If we get a higher high, this is a confirmation that this trend is bullish. So we will now wait to see if we get another 50% discount so we can buy at the next higher low. We're in this trade, we're in profit, we create another higher high, we wait until we get a higher low, we enter the trade, we wait until we get a higher high. All right, so Khadija, West Side, are you good? The higher low is where we buy. The higher low is the remember I told you this pattern repeats itself. The higher low is the C of the pattern that constantly repeats itself. Right? That's this. Higher low, higher low, higher low. Now, remember I told you that in trading, this is a skill set. We're not guessing. There's always a reason why the higher low becomes a higher high, right? There's something to the left of this higher low that gives it the energy needed for it to continue going up. All right, that's more intermediate. Knowing what the reason is something intermediate. But I just want you to be aware that we're not out here guessing. There's something happens during the impulsive phase that sits right here. That will also give us an indication. It gives us the data to know that the discount could be 50%, like specifically, it could be 50%, 60, or 80. We would know, we will have an idea of where C is going to show up because of what happened in the impulse. All right, let me pause here for a second. What is going on? All right. So you remember a little earlier I mentioned that trading is a lot like life. I want you to think about this for a second. Therapy is amazing. Promise I'm going somewhere with this. Right? So I want you to look at your impulsive phase as this. This is you going through life, right? Something happened. Something happened in your past. You didn't pay attention to it, but it helped turn you into who you are today and you know grow, become a person, right? That is A to B. That's your first phase of life. So maybe that was, let's call it primary school up to the end of secondary school, right? That's A to B. Let's say some stuff happened. Maybe you were bullied. Maybe you weren't. Maybe you were the popular kid at school, right? Maybe. But something, we will call it like a critical moment, like a defining moment happened during that A to B phase. You were not aware of it. If you're not aware of something that helps you elevate to a point, is it fair to say that you guys are eventually going to hit a ceiling? You're going to hit a point that you just can't go past, right? You had astronomical growth. Everything seems to be going your way, but then you just hit a ceiling. You can't seem to get past it for some reason. You could talk to me in the chat. Like, is that something that you feel could be possible? But anywho, let's say you hit this ceiling. Oh, you were going to say something? If Westside, if you were going to say something, that's completely fine. Want the interaction. Or if that was an accident, I'll just keep going. All right, cool. So that thing happened, right? So let's say now you hit that ceiling and let's say it wasn't something bad, right? It doesn't have to be something negative. It could be, positive stuff happen, but you weren't aware that the thing happened, right? So let's say now you're going into college, you're trying to figure out what to do, but you just find like I can't really focus on a major. I'm not really sure what I'm supposed to be doing. You go to the counselor on campus, they sit down, they start talking, and you talk, 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 and they were like, I realized that in what you're saying, you keep mentioning, I don't know. I don't know. It could be something cheesy like helping people or you know what I mean? Like they're different. They're behaviors that repeat themselves that point to one particular thing, right? And that person helped you realize that even in your past, this was a thing that was happening. Maybe your parents were doing the same thing. And then you're like, you know what? That makes sense. I saw my parents doing this stuff when I was a kid. And guess what? I grew up and I started doing the same thing. Amazing. Now that you're aware of it, during that time when you're not sure of what to do, right? You are failing, kind of failing, like these things are happening. That is that B to C phase. It feels like you're not growing as you were before, but you seem to be just stepping back a bit, right? This could be anybody's story. But in going through that time of doing that deep diving, it felt like you were going backwards until you found the thing that kind of defined you in the first place. You find it, you sit with it, you understand it. Now you have a better understanding of you. Guess what happens next? You take that thing with you and you blow past that ceiling that was stopping you before, right? Kind of makes sense. I feel like it makes sense, right? So that thing that I mentioned that is to the left of where C is, that thing is what helps price shoot through the sky, right? You're going to find out what it is in as you advance through the academy, but I just wanted you to have that principle, right? Where the more you learn, right, the more you're aware of things in your past, it could definitely help you with your future. And price and money is not different to that, which is pretty weird. All right, if that felt like it made any sort of sense, you could put a 7 in the chat. Let me know. All right. So, um, yeah, there's always something there. All right. So you could write that in your notes that something to the left of the higher low, something to the left of C, something to the left of the area that I want to buy is going to tell me this is the area that I want to buy. If you want to write a note as future self asks as one of the coaches what this thing is. What is the thing on the left? All right. And here's what's going to be helpful. Anytime you see a signal get sent out in the chat for a buy, that thing happened. Right. So anytime you look and you see like this morning we had oh, repeat again. Which part, Nikki? When it was talking about you asking questions in the chat? Okay, there's something on the left. Got it. All right. So we know this pattern happens, right? This is a pattern that happens. Cool, no worries. The pattern that happens has the A, B, C, D, right? I'm going to do it with the market structure titles, right? So this is the low, oops, low, high, higher low, higher high, right? We buy at the higher low. However, when we're trading, we are never guessing the area that becomes a higher low. We know that this area, like this, how I have a box here, we know that this box is going to show up. That this area where it's very likely that a higher low is going to show up, we know that's going to happen before it happens. Why? Because as a trader, as someone who is learning how to trade, we are very aware of our past. We know what to look for during the impulsive phases of the market. It's just like if you're now in your, let's say, your 30s, you find that you're very self-aware. You start to know, you start to be able to identify those defining moments in your life. Things that just happened that this could be big. If I sit with this long enough, if I journal this long enough, this could be something big. I just need to understand it. So in the impulsive phase, there's always going to be an area that gives the higher low the fuel to shoot all the way up and become a higher high, right? So let me know if that was helpful. For your note, you can say to the left of where the higher low shows up, there is something that gives the higher low the fuel to continue buying. And the same thing happens in a sell scenario, all right? In a sell, this is C. If you're talking about it from structured titles, this is going to be a high, this is going to be a low, this is going to be a lower high, and this is going to be a lower low. All right. And this is a structure of a bearish trend. Oh, trend. This is the structure of a bullish trend. Series of higher highs and higher lows, bullish trend. Series of lower highs and lower lows, bearish trend. All right. So we buy at the higher low and we sell at the lower high. Buy at the higher low, sell at the lower high. It's going to take a little getting used to saying it out loud, but once you draw this pattern, you are literally like 75% there. All right. And as you can see, I keep coming back to this pattern to explain all the stuff that I'm saying. Even though I started off super basic, even though I gave you guys a scenario with Black Friday, I keep coming back to this little pattern. The better you understand this, the more money you guys are going to make in these markets. All right. So to recap so far, this is what we know. Actually, I'm going to ask you guys, what are the two things that we do as traders? We only do two things. We have two moves. We buy and we sell. Awesome. When do we buy? We buy when the market is doing what? Going up, right? Going up when it's bullish. When do we sell? right? We sell when the market is going down. When the market is bearish, that's when we sell. All right. Now pause there for a second. If we're talking about the market being bullish and it's in a bullish trend, how do we know it's a bullish trend? Let's see. Let's see. How do we know a bullish trend is a bullish trend? Yes, when prices increase, and sure, but I want you to, that's what I was looking for, a series of higher highs and higher lows. All right. Series of higher highs and higher lows. That is a bullish trend. And then Khadija head of the ball. Um, you know that's a bearish trend when there's a series of lower highs and lower lows. All right. That's a bearish trend. So in a bullish trend, if we are looking to place the buy, where are we placing the buy in a bullish trend? Yeah, it's at C, but when you use the bullish trend language now. All right. C is if you just draw the thing by itself, but we're looking at the higher low, right? Higher low. The higher low is a discounted price. So Rashid, I'm going to just correct you a little bit there. Not exactly at 50%, but we identify a discount as being 50% or more. All right. So that higher low, it could be at 50, could be at 60, 70, 80, 90, could be any of those numbers. But regardless of the number that it's at, the principle is this. We buy at the higher low, right? And we know that that higher low is going to be somewhere below the 50% mark. So for your notes and for your future self, you want to put that we buy at the higher low. All right. Now, if we are going to sell in a bearish trend, which structure point of the bearish trend do we sell at? We sell at the lower high. Phenomenal. Lower high. All right. Lower high. You just want to draw that pattern all day long, as much as you want, right? If you can understand it with the lines, the next step is being able to see it on a chart. The chart is where it gets a little crazy. The chart is where you kind of go like, I don't quite see this, right? Because the chart is never as perfect as your drawing. Chart gets messy. All right, cool. Um, let's see here. So we went through that, so we know uptrend and downtrend. All right. So the last thing I'm going to show you guys is I'm going to show you one thing, but it's going to feel like two things. We know the bearish bullish trend is this, right? And now a bearish trend is going to be this. Guys, give me 1 second. All right. Right. So here's what I'm saying. This looks like a bunch of up and downs, but this is literally this. All right. Price goes up, price comes back down. This is a bullish trend. This is a bearish trend. Part of what we are going to need to know as traders is when a bullish trend turns into a bearish trend. And here's why. Remember that pattern that we drew? Right, we're going to be compounding knowledge. I told you that this was the impulse at the beginning. You have now graduated a little further. This impulse is a bullish trend. All right, just follow me here for a bit. The impulse is a bullish trend. The pullback is a bearish trend. All right, and then the continuation, yeah, trend inception. And now this is a bullish trend again. All right, now since we have a bullish trend that turns into a bearish trend that turns into a bullish trend, we buy when the bearish trend stops being bearish and becomes a bullish trend. All right, so let me draw the right thing here because that needs to be upside down. So we need this, right? Which in reality is going to look a lot like this. Drop an AC if you think that you're following so far. And an OMG if you just realize what you just learned. Okay, cool. All right. So the simple version, the super simple version, when you first got on the call was we buy at C. The intermediate version, as we got into the call, maybe like an hour, is we buy at the higher low. Now, as we wrap up the call, we are buying when a bearish trend turns into a bullish trend. All right. Here's how we know. Same information I gave you about the trend titles, trend structure. We're going to use that. So we know that if this is a downtrend, this is a low, this is a lower high, lower low, lower high, lower low, lower high, lower low. What's this? Is this a lower high? Like, don't overcomplicate it. Is this low? Is this high lower than the previous high? Or is it higher than the previous high? Higher. So if the high is higher than the previous high, it is a higher high. And this right here, is this low? What is this low's relationship to this low over here? It's a higher low. And this, my friends, is a higher high. This right here is a higher low. And this is a higher high. This is a higher low. Whoops. Okay. So that means that as even though we learned that this is, this is where we buy on if we zoom all the way out, this point that we're buying at is a higher low. But as you go deeper into it, who said it? Who said it? Who said it? Someone said trend inside a trend. Mario said it, right? So we have a trend inside of another trend, right? That means we wait for if we're in a bearish trend, right? If we are waiting, right? We're in this pullback area. We are waiting for this bearish trend to end. The sign that the bearish trend is ending is when we stop getting that series of lower highs and lower lows. The first sign, the first indicator, if this car was ahead of you, the car put on their indicator. That doesn't mean they're going to change yet. So the first sign is this. We get that higher high. That's confirmation number one. Right? Because we're not guessing out here. Right? We are moving off of data. So this is confirmation number one. Let me change the color. This tells us, you know what? Let me pay attention. If something is telling us to pay attention, that is an impulse. It's an impulsive move. All right. So this from this lower low to this higher high, that is the impulsive move. And then we have to wait. We got to wait and see, like, okay, we got the impulsive move. Am I going to get a pullback? Is it going to stop 50% or less? So we wait and we let it happen. So we let price come down and we get this right here. Oops. All right. When we get this, we take a minute and we check. If you were driving and the car ahead of you turned on the indicator, this higher low would be as if that car slowed down. Like you can visually see the car is slowing down. It's giving you a strong sense of knowing, like, all right, this car, it has the indicator on. It also slowed down. You know what? This car probably wants to turn. Okay. Hasn't turned yet, but it looks like it wants to turn. It's confirmation number two. All right. So the first time the bearish trend gives you that higher high, confirmation number one. It gives you the pullback that turns into a higher low, confirmation number two. We need to see that car that had the indicator turn in the direction that it indicated. When that car does that, then you're like, yeah, for sure. This car definitely turned in front of me. So when you get that second higher high, right? When we get this second higher high, that is your confirmation that the trend has changed. Now that you know the trend has changed, you are now looking for your entry. And you're going to enter at the higher low. Okay? I'll show you how this works using different time frames. But for simplicity, if we are, let's go to if we look at this drawing right here. If we are waiting for a bearish trend to turn into a bullish trend, we are going to wait for the second higher low, or we buy at the second higher low. All right. You guys give me an AC if you follow me and that makes sense based on what I said. If you need me to repeat, I can do that, but just let me know if you got it. All right, perfect. If you're currently in a bearish trend, we want to buy when that trend ends. The easy version, right? The uncomplicated version is you're going to buy at the second higher low and you just wait. You wait until that happens. If you don't get the second higher low, you're not in the trade. This whole thing is about confirmations, it's about data, and it's all about this simple pattern that you guys learned at the very beginning of this call when you knew nothing, repeating itself constantly. That's it. All right. And that's it, man. That's it. That's it. From here, the same way we compounded information just based on this over the last hour and 15 minutes, that's all you're going to be doing through your journey learning to trade with the Profit Arena. That's it. You're just going to get more information that makes that pattern crystal clear in your mind. You're going to start to see how you can tell when the trend is ending and when it's, you still haven't told us what's the thing to the left to pull back. I'm not. I'm not going to tell you that because that is information that you have to compound, right? There's something there, right? But telling you that is going to give you a whole bunch of trading words that it's going to be a lot for now. All right, it's going to be a lot for now. But if you just use what I said just now, with waiting for the second higher low, then you'll be fine. Let me see if I can find an example. See if I can find an example, and then we'll be out of here. All right, let's try this. Watch this. All right, so we are here, and I want to say we started over here. Okay, so if you're looking at this to this, you would say we were going down, right? This section here is bearish, and this section here is bullish. Yeah, that's fair. All right. So let's see what happened down in here. So we had, if we started here, right? Boom, boom. So this would be a lower high, lower low, lower high, lower low. Oh my gosh. Actually didn't need to go all the way up there. Didn't need to go all the way up there. Let's try this. All right. So high, low, lower high, lower low, lower high, lower low, lower high. All right. So this did not give us a lower low. Right? We did not get a lower low here. If anything, these lows are equal. So high, lower low, lower high, lower low, lower high, lower low, lower high. So before, if this was bearish, if this is going to keep going down, we need to get a lower high and another lower low, right? So price comes back up. So it came there. Is that higher? It's not higher. It's very close. It's probably equal. So we still don't have an idea of this being a downtrend. It's definitely not an uptrend, but we don't have that confirmation as yet. So from here, what did price do? It came down. This is not a lower low. So for us, this would be confirmation number one. This is not a lower low. That is a higher low. All right. So this is confirmation number one, higher low, lower low, lower high. Confirmation number two, right? This was the last high. Price came out here. This is higher than this high. So now this is a higher high, which then means that this is the higher low. So based on what we said, we buy at the second higher low. So if we bought right here, right, we would have been in the trade at this point. And you guys see what the trade did. Does that make sense? Is that practical? All right. That's going to take some practice. All right. It's not always going to be as pretty as this. But that's the principle of it, right? Just a simple version of it. To Mario's question, I can't go into detail, but I can show you one of the things that you can ask questions about later, right? You could save this as knowledge for yourself. You know, when I mentioned earlier, you go through life, a defining moment happens. You can call that, I don't want to say not force, right? But something happened that allowed you to excel more than you were prepared to excel. It's as if you've never had money in your life and then you suddenly win $5 million. dollars. Yeah. You don't know how to handle money. You suddenly get $5 million. dollars. Yeah, you're a millionaire, but you don't think like a millionaire. The thing at the left, one of the things to the left is a gap, right? One of the things to the left is a gap where price just shot past it, right? That is like that knowledge gap that you can have. If you've never had money, you suddenly have $5 million. There's a knowledge gap that allows you to manage that brand new bit of stuff. It's like your dad is the CEO of a company and he makes you the vice president, but you like to paint or eat crayons. You know what I mean? You're not prepared for the position. You have it, but you're not prepared for it, which could mean you're not going to hold on to it very long. But yeah. All right, how do you know how long to hold? How do you know how long to hold the trade? Should you just decide any amount of pips that lasts higher low in terms of buying? What numbers you would have put in? I'm not gonna go into entries right now. That's more advanced, right? Figuring out when to buy and when to sell. However, I will give you the principle based on your take profit, and it's still based on the same pattern, right? It's still based on the same pattern. You buy You buy it until the market tells you that I don't want to buy it anymore. Okay. So if you enter the trade and you know that the uptrend is a series of higher highs and higher lows, the moment you stop getting, let's say, the higher highs and the higher lows, right? You stop getting the higher lows, then you're not in an uptrend anymore, which means price is no longer going up, which means if you were in a buy, you should stop being in the buy. All right. Um, Now, as you go through the education, you're going to learn more about market structure. All right. So the same way, I'm just going to make this quick. The same way at the higher low, we knew that there was something here. Jeez. We knew there was something here that would be a good place to buy. The reverse is also true, right? The reverse is true. There's going to be something, um, how should I put this? As this, there's something on, there's going to be information here that tells you where price might want to stop as well, right? And that could be easily like something there where it's all probabilities. So it could, our take profit is always in a place where price could change direction. In the event that it doesn't change direction, then we go to another area that it could change direction, right? So that would be a lot more in depth for me to explain. But you can picture it like you're driving on a road that has like five different left turns. If you were chasing a criminal on a street that has five different left turns, you know there are five left turns on this street. You are mentally prepared that this criminal can take any of those left turns, but you have to wait for the criminal to make the turn so that you can chase them. That making sense? Your take profits in that scenario, your take profit is every single left turn on that street, right? But you're gonna hold your pursuit until the criminal makes the left turn. So if the criminal turns at the second left, that was your instead of exiting at take profit one, you exited at take profit two. If they bypass the left at one, two, three, and they turned at four, your take profit was at take profit four instead of take profit one, two, and three. Okay, that is the easiest way I could use something that we all know about to explain what we are mentally thinking about when we go into when we look at these markets. All right. Take profits are always areas that we have data that tells us price could turn around here. But we need to wait for our confirmations to show us that it actually does. All right. So the same thing happens for sell. Yeah, same thing. The same principle applies. All right, the same principle applies. For buys, we always buy at the higher low. For sell, we always sell at the lower high. Once you draw that pattern, wherever the lower high turns up, when we look to the left, when we look to the past, there's something there that has the information, that has the energy that price needs to continue falling. And when we're looking for those take profits, we're looking for similar areas like that price can have a reaction to, right? We're going to be prepared for it. But let's say next week I can talk about uh risk management, trade management, where you have an end result in mind that helps you determine when you want to get out the trade. So, real quick, let's say you were risking $5 on a trade. A good outcome is you get in twice as much money as you risked. If you risk $5, you're going to get 10. So if we have a trade, you take profit is $15. If you risk $5, when you get to 10, you could leave the trade before the trade got to 15. See what I'm saying? Because you already had that 2 to 1 in your mind. So it doesn't matter if the trade went to $20. Mentally, you were like, I want 2 to 1. All right. But that's something that we predetermine. But we can get into that next week. All right. That's going to be more of the mental side of trading because the skill set is pretty easy, but we make it hard because sometimes we want all the money and then we end up getting none. All right. So with that being said, family, it's been great. Another great session. Hope you guys got value. Let me stop this recording.